I don't know what kind of grease.
This is Real Generational Wealth. Live from Southern California, this is Abby, Espy, and Jen.
Hi, happy St. Patrick's Day.
What's up, everyone, and welcome back to Real Generational Wealth, where we have over 50 years of combined experience, making sure you and your family always have a place to call home. Today, we're actually super excited about our episode. We're going to talk about the one thing that you don't talk about in school, or they don't teach us in school, but it's super important in our adult lives, which is our credit.
Yes.
So be sure to hashtag live if you're watching us live and hashtag replay if you're catching us on the replay. Let us know where you're tuning in from. Later in the episode, we do have our special guest, Alvarez of LEA Credit Repair, to answer all of your credit repair questions.
Exciting.
Yes. So for those of you who are tuning in for the first time, welcome. We welcome all your questions, all your comments. And for those of you who are coming back, I know you might be wondering, where is Espy? Espy is a little busy today. She is handling an event with the Filipino American Chamber of Commerce, but she will be back next week. So be sure to tune in as well next week.
Yeah.
Anyway, before we get started on credit repair, Abby, what's going on with you? What's going on in your neck of the woods? How's your crazy real estate market out there?
Okay, so I'm mostly in the Inland Empire. Right now, it's pretty busy. Once I put a home on the market, and I don't like to underprice homes. Okay, so I usually get the latest comp and then add like 50, 75,000, sometimes even 100,000. But I figure it's a bit counterintuitive to do multiple offers with like 20 offers. So I prefer just to get one or two great offers on my client's terms, and then we just go with that. So I have a few escrows pending right now. And for the buyers out there, just remember that interest rates are starting to go up.
Yep.
I mean, they went up quite a bit just from a couple weeks ago. Yeah. So, we are still able to get buyers' homes, even if you're an FHA buyer, 3%, 3.5% down, or 5% down. You can definitely still get a home. You just need to have an agent represent you well and fight for your cause.
For you, basically.
Yeah. So don't be discouraged. I know there's a lot of buyers out there that are like, oh, I want to wait. It's too busy right now. It's a crazy market right now. Actually, no. I have an escrow that's pending right now. And what we did was we were the first ones to get in, and we were the first ones to submit an offer. And they were like, oh, we don't want to show anymore. We don't want to show the home anymore. They did end up showing it the rest of that day, and they did get other offers, but our offer was still accepted because I had a good rapport with the listing agent. And I mean, it goes vice versa too. Like when I have a listing, I have another listing, and the first buyer that came in, they sent us an offer over asking price, and I have a good rapport with their buyer's agent. So we were like, we don't want to keep going back and forth. We already have very well qualified buyer, so let's just go ahead and accept their offer.
Sorry.
So even though you feel like the market is crazy, if you have an agent that's very proactive and and can talk to the listing agent or vice versa, I mean, it's definitely still a good time to buy, and it's an awesome time to sell.
For sure.
You want to,
For sure.
Yeah, it's low inventory right now. So if you want to sell, you can get it on your terms. For instance, my client, their home is not going to be built until August. So we found someone first one to see the home, cash buyer. They can let my client stay in the home for months, 3 months or more. Whereas if we had gotten a buyer that had financing, then you can only have them stay for 2 months because a lease back is only up to 2 months. Otherwise, it's going to be considered an investment property for the buyer.
Yeah.
So that was a great win for my clients. And so if you're still on the fence about selling, this is definitely a great time to sell. I mean, homes sell within the first couple of days. Yeah. Yeah. So how about you, Jen? What's going on?
Well, I want to piggyback off of that. I know my video is a little glitchy. It's kind of interesting, but I do want to piggyback off the fact that yes, interest rates are rising, but they're still at record lows. When a few weeks ago or a month ago they were in the high twos, you're starting to see some in the low threes. Again, still record
Yes.
lows, still great rates. And yes, it is competitive. But again, if you are teamed up with the right agent, a good lender, there's no reason why you shouldn't be able to get a house. Like I'm currently working with some VA buyers and VA. I know you had mentioned actually previously in one of our shows, my video. Sometimes VA doesn't look as good as other loans, right? VA loans. I don't know if we have a ton of viewers who may be watching us from our previous episode, but VA loans are 0% down for our veterans. So I do have some clients, and we had to see a few properties, but we came in super strong. We actually even shortened contingencies. I think
Awesome.
we're at day 11. Oh no, I think we're at day 10 right now, and we're expecting loan approval tomorrow. And so
Whoa.
yeah, like the appraisal
That's
came in
crazy. Yeah.
the appraisal came in super quick, and this and that. But I mean, it helped that my buyers were ready to jump. So for you buyers who are watching, you definitely want to be ready, right? If you know you're going to buy a house, you got to do this 100%, both feet in, not a wishy-washy, 1 foot in, 1 foot out. You want to, if your agent sends you a property and you want to see it, go see it. Don't say like,
Yes.
hey, I'm going to wait till next week because the property may not be available next week anymore.
And we've experienced that too. Like sometimes it's like, oh, I can't see it this weekend. Okay, let's see if we can view it next weekend. And then it's like, oh, they already reviewed offers during the week. So sorry.
Yeah. So be ready to jump, but also be patient, right? The right home will find you. You will find it. But yeah, tons of opportunities still. I mean, Abby and I are getting our buyer's offers accepted. So
yeah, and you don't need to be like 30% down, 20% down.
Yeah.
We have buyers that have 0% down, 3.5% down, and we're still able to get them home. So don't be discouraged.
Yeah. But I know a few of you who are tuning in are basically interested in the fact that we wanted to talk about credit repair today, because that's probably one of the bigger reasons that a lot of people hold back on buying a house. I get
Yes.
it. You have a job, you've got a little bit of money saved, you're ready to buy, but your credit isn't the best. So today we wanted to bring in Ellen Alvarez, who owns her LEA Credit Repair company, to basically help you figure out the steps to fixing your credit.
Awesome.
Give me 1 second. There she is.
Hi, Ellen.
Hi, Ellen. How are you?
Hi. How's everybody?
Good.
Thank you for having me.
Okay. So, I guess let's start with you. Tell us about yourself. Tell us about what you do, and yeah.
Okay. It's a family business. We started LEA Credit Repair as a family business. It was basically me and my youngest son, who's my third child. He's still in college, but because we've been looking for a business for a while, what could we put up, especially during the pandemic? So we thought of this because of our previous experience. Like in my story, we went through a very rough time, my family and I. It's been many years after my divorce. I was supporting my kids on my own.
Wow.
And so that was 5 of us. But then later down the line in life, I ended up supporting 4 other people.
Wow.
9 of us. In
the Filipino culture, right?
That's
what
what
it's about. Like it's always about family.
Yeah. we don't let family hang dry.
Of course.
Yeah.
If it, my sister and her kids. So we ended up just, I guess, bunking together in a tiny apartment.
Well, you got to do what you got to do.
Yeah. And then the recession hit, and boom, we ended up dealing with just one income, which was, I was lucky enough to still have a job.
Mhm.
And so supporting 9 people for a while, and it was hard as heck.
Yeah.
You got kids who are hungry all the time. And then we also live in Orange County, and everybody knows what Orange County
expensive
prices
in
are like.
OC.
It is
Yeah.
expensive. I mean, I would not go back and do it any differently, because we live in a great place, a public school. We live in Irvine.
Oh,
So
yeah.
it's safe. Yeah.
The most
Safe.
expensive.
It is. It's expensive, but I even at some points asked if we should, move to like what do you call this? Covina, West Covina. But all my relatives, because they knew that we were single mothers, and I was a single mother with kids, like, no, stay where you are. I'm like, okay. but
And they have the best schools. Those are the top ranked schools.
Yeah.
Irvine, the
Yeah.
Irvine School District.
So that experience, it really led us down a path of financial hardship, and credit score suffered. And so, we spent years trying to recover, but it was very difficult. We didn't know anything about credit or credit
Well,
repair.
most people don't, right?
A
Schools don't
lot of
teach
people,
this.
exactly.
Some parents don't even talk about it. I mean, like my parents did talk. My dad did teach me a lot about it, but even then, like there was still a lot that I had to figure out on my own, and that's it. I feel like nobody is educated on credit.
Yeah, it's like a taboo subject. I was like,
Yeah.
why?
And some people don't even they don't keep track of their credit score, so they don't know.
Yep.
They don't know where they stand.
I think the statistic is 79% of people do not know how to, deal with their credit. They don't even look at their credit scores.
They usually find out when they're applying for a car or getting ready to buy a house, and they're like, oh my gosh, I have this collection on my report. I can't buy a car.
It's too late. You've
Yeah.
done all of this stuff, and like in one of my lives previously, I had talked about how like credit utilization, which is a big thing, and that people don't realize how that really impacts their scores.
Right.
And I thought, even me, okay, get a credit card, 1,000 credit limit. It's okay if I spend everything, I'm gonna pay it all back, right?
I'm
gonna pay it back and stuff.
Yeah.
It's like no, it ruins your credit. It really brings down your credit score over.
That's true. I mean, I'm experiencing that more people have, like right now, income is not usually the problem. Like with buyers, it's their credit score. Like they don't realize that the utilization of their credit cards or their lines of credit, it highly affects your credit score. Like some of them will have, like what you said, they'll have a credit line of 1,000 and then they'll utilize it 90%. And they're like, I don't know why my credit score isn't going up. So
okay.
I always pay on time.
Is
So yeah,
that new
utilization
refrigerator?
is basically the biggest thing then, right?
Utilization, payment history is
And
actually, payment history is really important, those late payments and stuff. So those are the two biggest things that impact your credit scores. There's also a mix of your credit, what types of credit lines you have on your credit, or like car loan, student loan, credit cards. It's better if you have a good mix. That'll show the lenders, that you're capable of, it just adds to your credit worthiness.
Right.
Yeah.
Yeah. So I have some clients that are watching, and they're wondering, they're kind of on the cusp of the next tier, right? For their loan, like tier 1 credit. So they're wondering, what do they need to do to quickly increase their credit score? Like, what can they do?
Probably the most
What can they
common
do?
one.
Well, they can. Most common is, one, you got to take a look at your credit score first, right? You got to know what's in it. The simplest things that a lot of people don't, I guess, realize is also your inquiries, your hard inquiries,
Mhm.
like especially when you're applying, you're applying to different lenders, right? And a lot of those will get your credit report or your credit report will get hit with those, and those can bring down your credit scores. Now there is
How
an
much?
easy way, huh? At
Do
about
you know
five,
how much?
like about 5 point, not too significant, but
Mhm.
if you have a lot of them, it can become a bigger number of of points that'll get deducted. But there
Oh.
is, but those are the ones, one of the simpler ones to remove. Yeah,
Okay.
there is I think what do you call this, a time where, like, for most it's 2 years, but
Years
a
and
lot,
Yes, yeah.
but also a lot 1 year. But nowadays you can call the credit bureaus and tell them, hey, I don't recognize this inquiry. I never authorized this, things
So
like
is
that.
that one of
I
your hacks?
never, it's one of the hacks. Okay, I'm sharing a hack with all of you.
Yay.
But this hack you cannot do on, like, for example, you have an inquiry with Capital One, but you have an open account with them, then you can't
oh
do
yeah,
it with
you have
that.
like actual credit.
Oh,
you
okay.
know but all
Yeah.
the other inquiries that you have that you got, you don't have an open account with, you can get rid of them just like that. You just give them a call. You can give them a call straight and say, hey, claim fraud. It's like, hey, I don't know this. I never signed anything. I didn't authorize this. You need to take this off. And a lot of times they'll maybe put you on hold and say, okay, let me check this out for you, ma'am. And then, just keep at it. And if it doesn't get deleted within 1 or 2 days, then you can follow up again and say, yo, I
Just
just
keep bugging them, right?
yeah.
The key is in the follow
Usually,
up.
yeah, that's again why we have credit repair services, is because it can be a lot of legwork, a lot of follow up. And I
Mhm.
keep saying credit repair, it for me, my son, this is full disclosure, we're going to be honest with you. You can do it. It's
Mhm.
not rocket science.
Okay,
You
well, we
don't
actually
need a
have a question here from our audience
okay.
asking, because you just said right now you can do it, right?
Yeah,
So
you
we
can
have
do
a
it.
question from the audience. Someone saying, well, what would you suggest is the very first thing someone with poor credit do to help improve their score?
First, look at your credit report, go line by line, and check for errors, any errors, even if it's tiny, like um, the wrong date. Even if, like, for example, you opened a loan June 5th, but it shows June 6th for some reason, then you can dispute that and say,
Just
yeah,
oh,
just
based on the date?
yeah, you
Wow.
can. Anything, any errors in there, spelling of your name, you write a letter disputing, asking them to validate the debt or validate the information. Okay, um, and then that's like, I guess, our first round. Those are the easy ones. So you ask the credit bureaus to validate first, and a
Mhm.
lot of times they'll,
Sorry,
then they'll try and contact the furnisher or the lender
got it.
Mhm.
for the information, so, and make sure that it matches and stuff. And then they'll either respond with a deletion, or they will let you know that, okay, we verified this. And then there's extra steps that you can take
It
later.
seems pretty cumbersome when you have to do a lot of them, right?
Yeah. It is. That's why credit repair
Okay,
services.
well, so
But
for the person who
they,
has the poor credit, who's doing this for the first time, can you let them know where can they get their credit report? Where can, there's a ton of ads out there saying freecreditreport.com, but they still need to
Credit Karma.
no, there's only well, yeah, there are a lot of services like that. I've heard about Credit Karma is a really popular one. But the one that is backed by the federal government actually is annualcreditreport.com.
Creditreport.com. Yes.
And they have a special right now. They're offering free weekly credit reports because of what we're
Wow.
going through
Uh-huh.
the pandemic. And
Weekly. Okay.
yeah, weekly. I believe that runs through April 2022. if I'm not mistaken.
Wow. Okay. Okay.
But
So you
yeah,
guys take advantage of that.
I just found that out. But that's huge because it's weekly, especially if you're in the process of, trying to buy a home
Yeah.
Hmm.
and repairing your credit. Um,
Yes.
Another easy one, and I know I talked about this in one of my lives, is uh, in your credit report, that section where it has all your personal information, your name, your birthday, your employers and stuff.
Hmm.
Go through that. Don't just skip it. I know I've skipped over it. It's like, yeah, okay,
Yeah.
that's fine. But go through that and make sure that the information is correct, like to the T.
I mean, for mine, it's all wrong. Like when I look through
Really?
mine, it's a family member's info that's in there. I'm like, did you guys use my credit for something? How come it's
Aw.
not my address? It's like an address in Venice. Like I never lived there,
Uh-uh.
but I know who lived there. So what do I do in that case? Like,
You need to dispute that.
okay,
You
okay.
need to get in touch with the credit bureaus, and you could probably call on that and tell them, hey, this is the wrong information. This is my
Mhm,
SS number. This ain't my name. This is not my
mhm.
address. And a lot of times when that gets corrected, some of those accounts will get deleted, or then they won't
Okay.
be able to verify them because they're not the correct address or the correct name on
Mhm.
them. Yeah.
Okay, good to know.
So you mentioned annualcreditreport.com. I
Yes.
remember at the very beginning of my own like credit repair journey, um, I did it as well. I went on that site. So I don't know if it's changed, but do they offer credit scores? Because they didn't at the time. This is a very long time ago. So
Oh, I'm
it's your
not
best
They
sure.
credit
It
score.
should come
they
with your credit
do.
report.
It's
Yeah.
not
They sh-
free. It's not free. You have to
yeah.
upgrade like
Yeah.
$7 or something to get your score from one, but it takes you out of annualcreditreport.com and takes you direct to
The bureau.
Experian.com
Either
or
yeah.
Equifax.com or TransUnion.com.
Got
Yeah,
it.
because I did my own credit repair. So what I found was, okay, so I was pretty
Abby,
reckless when I,
I
oh, sorry, what?
said me too. I did my own credit repair too.
Yeah.
Yay. Good job.
But
Me
I was
too.
I was I was pretty bad when I was like in my mid 20s, right? I racked up a lot of credit cards and I wouldn't pay things on time. My credit score was like 559, something like that. So I had a lot of free time, so I would just dispute everything, settled for less than the full amount. I would dispute it like, what is this? I don't know what this is. And I had some extra money to pay things off. And so after I finished doing that, my credit score went to 779. I was like, wow, wow, okay, this stuff really works. And it only took a month.
Yes.
It took a month
Yes.
of disputing
Wow.
and
Awesome.
paying things off. It was because I didn't have that much credit available to me at the
Hmm.
time. And once I paid something off, it was like, oh, zero utilization. Okay, let's
Yes.
make her credit score go up. So I was like, okay, I'm gonna go look for a new car now and rack up more debt.
Yes. Yeah.
So I have a
Credit
question
universe
as
is
far as
huge.
these credit scores. So if you go to annualcreditreport.com, you guys or someone can get their free report, but you have to pay for the scores. Now we mentioned earlier Credit Karma because a lot of people talk about that. How accurate are these scores, or even the scores that are offered to you by when you have a bank account or a credit card and you log into your account online, like they'll usually give you a FICO score. How accurate
Yeah.
are these FICO scores?
Well, I believe there's FICO Vantage scores. There's different scoring systems, so it really depends. So as far as like the accuracy, I guess they're accurate depending on which system the lender is using. Um, I heard that some lenders use a much more conservative scoring,
They do.
where
It's a lot like when
yes,
depending on the lender, if it's a car lender or a
hmm
home loan, it's much lower. But I would say Credit Karma is very inaccurate. So all of you that have a Credit Karma account,
Yeah.
super inaccurate. Just go direct to the credit bureaus like
yes,
Experian.com,
yeah.
Equifax.com. Experian.com is pretty great. Like it's free and they give you your free score every month. So you don't have to pay anything. You can keep track of your credit that way.
Yeah, to get your score is not hard.
Yeah.
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 It's to
Yeah.
get it
All through
to go up. That's hard.
yeah. It's not that hard.
Well, when you don't have money, well, for my case, I had money to pay off accounts. So what do you do if you don't have the money to pay off accounts or to fix your utilization? What do
Okay.
you do in those cases?
Okay, for I like this topic with dealing with accounts that when you're in a bind, and a lot of times, I've gone through it where I was too scared to talk to lenders or the credit card companies. I was scared because I thought that okay, I failed, so I felt really guilty and really bad, and that really prevented me from talking to them, which only I was just digging my grave deeper, right? I was digging the hole deeper. Um, you should always contact your lender and talk to them because a lot of them will, they're more than willing to work with you. And they have relief programs. They have programs for people who are under financial hardship,
Mhm.
either temporary or it may be prolonged. But if you explain your situation, a lot of them are really nice and they will work with you. You know what I mean? Now I've heard horror stories, right?
Yeah.
Of lenders being really mean and bullying you into paying. But I mean, if you don't, for coming from their side, just look at from their side, you're not talking to them, you're not picking their call, picking up their calls, and you're supposed to be making payments, like
Right.
you agreed, you signed the contract. So it's frustrating on their part as well, right? So but if you go ahead and reach out and talk to them, they're really nice about it. From my personal experience, they're really more than willing to go out of their way and work with you. Even I remember I went down. I only had to pay like $25 on an account because I was just severe financial hardship, but explained everything. I'm crying on the phone,
Like,
not on purpose. Okay. It wasn't like an act or anything,
right.
but
But I
it
mean,
kind of does. It
there's a
does
big
help.
difference when you are contacting them because of a
Yes.
hardship, right?
Yes.
As opposed to them chasing you.
Yes.
Hey, where's our money? Where's our money? We're going to send it to collections. Like it's
I mean,
basically beating them to the bullet and trying to figure
yes.
out a way to work with them, right?
Yeah, especially now. I know with a lot of people are having a hard time now, right? There are
Yes.
tons of layoffs. People are kept, left hanging. People are facing evictions and stuff like that. But I know in California, because you're selling houses, especially, and I'm pretty sure our audience, for the most part, are in California.
Yeah.
And I double checked this last night. For all Californians, you do not have to worry about your credit report, your credit score. Most of, if not all, I believe they did say that all of the major banks and lenders are making exceptions during this pandemic. They
Mhm.
will not report any delinquencies or anything like that. So we have a little bit of reprieve. There is no hard date yet as to when that will be up. How when that relief will be up or when it will expire, because they don't know when this pandemic is going to expire. You
Right.
know what I mean?
It's true.
So yeah. So late payments for California at least. Other states, they'll have to check their state website. And I would suggest, because I believe that the states have a COVID website, that lists all the assistance, federal assistance or state assistance that it's available to their residents and things like that. Go there and double check what your state has for you, for the consumers, and they'll list it out. But we're lucky here in California. Um, they're directed to not report anything. So
Is that part of the moratorium or forbearance? Is that why they're not reporting it?
yeah.
I mean, that also,
Well, forbearance is
I was gonna say, that doesn't mean like don't pay your stuff, guys.
no.
We're trying to fix
You're
credit
getting
there.
a
You
yeah.
can. You can.
You're getting a little pause. But afterwards, they're gonna have to pay.
Right.
So,
Yeah.
So this, okay, Abby brings up a great point. So this forbearance, I know we have a bunch of viewers right now who are homeowners and probably got hit really hard with the pandemic and couldn't make their mortgage payments. So they called their lenders, they filed a forbearance, and some of them are scared, like, hey, how does this affect my credit?
no.
What if I want to refinance? What if I want to sell it and buy another one? What does a forbearance do to our credit? Or
Forbearance should not negatively impact your credit score, so you can breathe. Especially, and this goes even pre-pandemic or post-pandemic. Even if you're in forbearance pre or post, it shouldn't negatively affect your score. And this is why lenders and encourage you to contact them so they can get you in these relief programs, to work things out. Now, I know there is a concern about, like, well, what about after the pandemic? After forbearance, of course, you're going to have to go back and pay everything. Are we going to have to pay back everything at once? Stuff like that. I do believe that a lot of the major lenders, at least, do have programs for that, for post-pandemic or post-natural disaster
right.
programs to help you get back on your feet and not just slap you with, okay, here's a lump sum, right?
You
Yeah.
haven't paid for, you
That's
haven't
not
paid for
fair.
several months, and now you got to pay for all 8.
Yeah, right. They'll be nice to you. Yeah, okay, we'll get you in forbearance. And then later, here's your. I had to censor myself. Pay this. But yeah, a lot of people, especially, we're lucky. A lot of lenders are being really helpful and making us exceptions during this time. They also have a natural disaster code. Yeah, outside of this COVID code or whatever pandemic. So
Okay, so we have a question. What suggestions do you ladies have when one is trying to buy a home and one is getting paid under the table? So this is actually a question for a lender, but typically you need 2 years of W-2s. If you don't have 2 years of W-2s, like let's say you're just a new graduate from college, you need a verification of employment or an offer letter that lets them know there's a high likelihood that you'll be staying in the position for a long period of time. But if you're getting paid under the table, it'll be difficult to get a loan because there's nothing to document what your pay is, especially for those getting paid cash. It's really hard to document that. Okay, so we're kind of off subject a little bit. Okay, so let's go back to credit and doing things to increase your score. And yeah.
Okay, so first thing we said was look at your credit report, go line by line, and figure out what is and what isn't, right? Going back to how you said credit utilization is probably the biggest factor of your credit score. How many percent do you is a good percent for utilization? Like, if someone wants to go up 20 points, how much do they got to pay down?
okay, so utilization, and there's two different ways of thinking about this. There's a more conservative way that I believe some lenders like the 1 to 10% of your, and that's kind of hard.
That's hard.
That's hard. It is hard, but can you imagine
Yeah.
your score?
That's super hard. I know. It's, what a lot of people do is they'll just pay it off really quick, and then later, after they're done with their
Then
home
you-
loan, it's like, okay, I'm gonna rack up more
Yeah.
debt later.
When I heard that, I was like, get out of here. It's like, what's the use of having a credit card, right?
That's
No.
true.
But the
Yeah.
standard is 30%. If you can just keep it under 30 or at 30, but under is
Is
good.
that for each or is that for overall? You know how sometimes, for
Well,
each
when-
account, right?
when you do it for each, well, yeah, it should be each, but even if you calculate it overall, it would kind of be the same.
Yeah, because
But-
sometimes you can have zero utilization on one card and then
Yeah.
50% on one
Well,
card.
it-
So
It's for overall 30%. So when for your credit score, right? They take everything on your credit report into into consideration. Yeah. So, but for easy personal tracking, I would like personally, my advice would be okay, uh, on this card, I'll only spend 30%. This card, 30%. You know what I mean? On
Mm-hmm.
whatever line of credit they have, 30%. Just keep it like that so it's easy. So, because sometimes, when you see those sales out there, you're like, oh,
I
yeah, I
know
got one of it.
Nordstrom Rack.
I,
Oh my
I,
God.
I think I'm still at 10%. Come on, let's do it, You're doing the math. Oh, yeah, 10%. I got 20% more.
Yeah.
But in
Yeah,
reality now, right? So,
that's
Okay,
true.
so if lenders look at, or if the score, I guess, depends on the overall utilization, would it be recommended for someone to open up a new credit card and then transferring balances or whatever to even it out or whatever the case? Because you're now having another line, right? So then your overall amount.
well, the more credit lines that you have is actually good because that gives you a good mix, right? And it tells the lender, oh yeah, she can handle herself. She has these different accounts, um, and she's handling it well. She has low credit utilization. She has on-time payment. She's current in all the payments and things like that. So it's good to have good revolving credit, good revolving credit
But
history.
what about if the case is the opposite, right? What if you have like 90% utilization? How does that affect your credit?
If you have 90% utilization,
Yes.
go, what's wrong with you, girl? I said 30%. It'll really affect your score. It could bring it down up to, I believe, it brought my son's score down almost 30 points.
30
So it is,
points.
yeah, so it
Wow.
is huge. That's what I've heard. So, yeah. I mean, and also be careful, when you're applying, also, you want to make sure that you're not out there keep applying for stuff or else they'll keep
Oh, the
showing up
hard
on your,
inquiries.
Yeah.
yeah.
It adds up, right?
Yeah. So I'm trying to tie that into, getting different credit lines, things like that. So you want to have a good mix and you want to have more than one card. You don't want to have a gazillion because I do know you don't want to have a gazillion cards.
Okay, so let's say someone has three cards, um, opens up a fourth, and manages to pay off one. So now that one's at zero, and the other three are like less than 30%. Do you close that first one that you had paid off?
No, you don't want to close your account. Yeah, because that would that's bad. You
Yeah.
want to keep old accounts, especially when they're current, good standing on your credit report, because this will also show that, okay, she's had this account for a while. So she's able to conduct herself,
Mm-hmm.
financially responsible,
Right.
person. Yeah. So the older the accounts are, the better on your account. So you don't want to necessarily just close your account.
I mean, what kind of clients do you usually get? Like, are they people trying to buy a house or they just want to get their credit
There's it's
better?
There's different types of people. A lot of them do want to buy either a house or a car, make the big purchases, and they can't because
Yeah.
of their credit score. And sometimes a lot of them just want to save money because if you have a higher credit score, your interest rate goes down, right? That you have to pay on, even if it's just your credit card. Like, say, a lot of, like, if you have poor credit score, you could pay as much as, I think, 25. I've heard some crazy stuff that you could pay up to 32% interest rates, which is, unheard of. But if you have good credit score, you could pay as low as what, 5%,
Mm-hmm.
3.5%. So yeah,
That's true.
Yeah.
Yeah, like I think a lot of people don't understand, especially when you're about to buy a house. It's good to have your credit look the best that it can look for the lenders because you can benefit from that by getting closing costs paid. Like if your credit score was a 660 versus a 780, you would have more closing costs paid and by the lender, and also you would get a much better interest rate because
hmm
the lower your credit score, the riskier it is for the lender. So your interest rate goes up as a result. So if you have 780 awesome. You can qualify. You can also qualify for certain programs. Like there's some credit unions. There's one that I use, California Credit Union. If you have perfect credit and you want to do 5% down with no PMI, okay, no private mortgage insurance, you can qualify for their programs. It's a portfolio loan, but you need to be very well qualified. You need 780 credit score, low debt to income ratio, but there's so many benefits to having great credit. So that's just something, for those of you that are looking to buy or even just refinance. When you refinance and your credit is top tier, you'll get the best rate and the best terms. So that's just something to think about.
Yes, best terms. Yep.
Yes, that's what we want. That's the whole objective, right? We want to qualify for the best terms. We don't want 20% interest on a car. I mean,
Of course, yeah.
Or a high
payment's
down
gonna be
too.
horrible.
Or a
On a
high
what?
down. Or a high down payment. Because if you
That's
have really
true.
good credit scores,
Yes,
they're
yeah, that's a good point. Because if
yeah.
you have a very good credit score, you can do 3% down instead of 5% down.
Mhm.
There's those programs are mainly for the ones with higher credit scores, like 720 or higher.
Yep. So you want to get up there.
So we have a question here from one of our viewers. Can you speak about situations or the recent practice where creditors have cut the credit limit even though the cardholder has paid on time consistently, reducing credit availability?
They cut the credit limit?
Yeah,
Oh, could it be income?
Well, I mean,
Change in
I'm going back to how we were talking about a credit card. So I have a credit card that I paid off. I mean, it's a credit card my dad opened up for me when I was 18, right?
Uh-huh.
The limit's like $2,000, my very first credit card. I don't use it anymore, right? So I think it was
I see.
so I don't use it. I keep it at zero, but I also get notified. They say, hey, after like a year and a half of no use, they'll tell me use it. Otherwise,
Yeah.
we'll
gonna
lose it.
lower.
Or the
Or I'm
credit
assuming
limit.
they'll cut, it's the same probably situation that
They're trying to
your
bait
Christian
you
is
in.
talking about. I mean, I don't know. Do you see that as a common thing that
I
creditors?
actually have not, but I can understand it. They're probably baiting you to use it. Of course, they want you to use
Yeah,
their credit cards because that's how they earn money, so
yeah. I mean, I swipe it once and then I just pay it back off because I don't
yeah.
need the card.
I mean, I
Yeah.
had something like that happen. Like when I paid something off, or I paid something off, and then the credit card company like lowered my limit, and I was like, what are you guys doing? It's like, so I think sometimes it was when I applied for a business card. I was applying for a business card. I'm opening up my office, so I started applying for business cards, and I was thinking maybe it's because they saw that I was applying for business cards, and then once I paid down something, they lowered the limit to like close to what my balance was, and it totally
Really?
made my score lower. And it was
Well,
like,
then
why'd
we
you
can
guys
have
do
them.
that? What do you do that for? But it was during COVID too, like in the beginning of COVID. And I think the credit card companies were kind of scared, or maybe there was too much activity on my social security number.
Well, if
So
anything, if they do that, they should disclose why they did that to your credit limit.
yeah, but it's okay.
Yeah.
It's doesn't bother me.
I do
It
want to
doesn't
say
affect me.
something about business credit, which I also learned in my whole growing my own credit score journey is business credit doesn't show up on your
No.
credit report.
No, it
It's
doesn't.
it's separate.
Yeah.
Yeah,
It's
business
totally
credit is
separate.
separate.
Yeah. Doesn't
And
touch
then,
your personal.
but you have to use your personal to get business credit.
Yeah.
Yeah, but yeah, your company's credit score.
You have to use personal? No.
But oh, that's true. No, you're right. Well,
No.
some business loans you have to use your personal credit, but some of them you don't. No, you're right, because I have some cards that are just under my LLC,
Yeah, you should be
and
able
it's not
because
under me.
you're using for business credit, you're using your
TI or
Number, yeah.
EIN or
TIN
your
number.
EIN,
Yeah,
not
your
your
tax ID number.
yeah, not your social security number. So it shouldn't even touch your personal
But
credit.
sometimes, like, you have to be a guarantor. That's what I guess maybe it depends on the bank, because a lot of times I had to be the guarantor of
Your business.
like Yes, like whoever is 51% owner, you have to be the guarantor for the card. So that's what I experienced.
Oh, there are
I
some
agree with
hacks
the
in
same thing
business. Huh?
because we launched a clothing brand, and when we opened up our company and opened up a bank account and then started applying for business credit, they asked for, I don't think guarantor was the term they used, but they asked for someone's credit, and
Yeah.
or like a personal credit, like a SS number. So
Oh,
yeah.
well, there are
Yeah, it
some
wasn't guarantor.
business
I don't
credit
know. Yeah, I'm
apps.
not sure what word they use, but I do know it still doesn't
I
show up on my
know.
credit. So,
Like, what's the word?
but okay, so we basically recapped on how to fix your credit. You first get your credit report. You want to go line by line, check for any, I guess, wrongs or any mistakes on there.
Yes,
um, with your
errors.
utilization, you're going to work on getting your utilization down to at least 30%.
Below
And then
30%, right?
below 30%, yes. And then you said to keep your old cards, right?
Your
Because
old accounts.
your old
Yeah,
accounts, yeah,
keep
credit
your old
history is
accounts.
super important.
Yes, credit.
Are we missing anything? Is there one last tip maybe you can give to our viewers that they can do?
I don't
Yeah,
know.
how do people start with your program in the first place? Like, how do they contact you, and how do they get started?
Oh, with our program,
Mhm.
they contact us and we schedule a consultation, free consultation, and let you know what we're about.
Okay.
After which, if you're interested, then we'll go through a initial credit report audit. We'll audit your credit report, so we have to pull your credit report. Otherwise, we don't know if we'll be able to help you or not. And then
Mhm.
we audit it together with you, and we'll let you know what it is that we see and what we can do for you, and then also work with you. Which ones do you want us to tackle first? Or, we can't do anything without your permission, of course. So
Mhm.
this is a partnership. It's not just us telling you everything. Okay.
Mhm.
So it is a partnership. And basically, after the first initial credit audit, I'm sorry, credit audit, then we will go and do our first round of disputes. We send off the letters to the credit bureaus, our
Mhm.
first targets, and then wait for 30. Usually it takes about 30 days, depending on what kind of item, what kind of dispute it is. Sometimes we can do those, some over the phone or
Oh.
via fax, yeah, which
Mhm.
would make it easier. Like the hard inquiries is one that we can try and do over the phone.
Mhm.
And sometimes we like to try and use fax, so it makes it quicker than mailing them out. But mailing certified mail is also a guarantee or proof that the credit bureaus did receive them, so they
Mhm.
can't say no, we never received. It's like, yeah,
Yeah.
baby, you did. It
You
says
have
right
proof.
here. Have proof. you
Yeah.
know and then usually 30 days, they'll either respond with a deletion, of whatever you're disputing, or correction,
Mhm.
or another letter saying, okay, we verified this. Then there's another step that we go through, second round, depending on what kind of response that we received after the first round of letters. And our program, we have a 6-month contract, but you
Mhm.
are free to cancel anytime you wish. The contract is renewal after the 6 months, but of course, us, we would like to try and get you out free
Yeah.
before the 6 months. Yeah, because we don't want it. We're here for our clients. We're here to help you guys. We're not here to and this is our mission. Because we went through hell, honestly, trying to repair my credit, our finances, and to we don't wish that on anybody, especially
Mhm.
families. You're trying so hard to get out of that hole, and sometimes you have dark moments where you're like, what did I do? And you just want to cry sometimes. you can be faced with homeless, and all that stuff. But having
That's true. Yeah.
credit is important. A lot of people don't believe in having credit, which I have
That's
to say
odd. Yeah.
it is odd. So it's like, okay, are you a billionaire? can you pay
Here in
everything?
America, credit is everything, right? You're
It,
basically
Your
defined
credit
by
is
your credit score.
everything.
Yeah.
it makes things easier.
Yeah.
That's true.
I know a lot of people probably don't like credit. They feel that way because they had a hard time with credit. And again, maybe it's because they didn't know how to deal with it, or
Mhm.
they didn't know how to maintain their credit, build it, and increase their scores and dig themselves out of the hole. So we're all about educating, and we partner with our clients and try to help them, you know, change their lives. So, because it's hard, it's a hard life. Poor
That
credit
sounds like a
score.
great program. Now, how do they get a hold of you or how do they contact you?
You just go on leacreditrepair.com, and the information is all there. We have a little sign up there where you fill in your information. We can get back to you, or you can send me a DM here and
Mhm.
on Facebook, and we can chat about it. That's the easiest thing, I think.
Awesome.
DM
We'll
Ellen.
put your information in the comments. That way it's accessible for everybody.
Good
Okay.
idea.
I was clear.
You're super helpful.
No,
Oh my
that
gosh,
was
and so
great.
knowledgeable.
Yeah,
I
that
hope
was great.
so.
So everyone watching, if you guys have any more questions regarding credit repair, so Abby and I and SB can help you guys find a house, then Ellen is your girl. Again, we'll put her contact
Yes.
information in the comments below. And if no one else has any more questions, we will see you guys all next week on Real Generational Wealth.
Yay.
Have a good night, guys. Oh, and
Awesome.
happy St.
Bye.
Patrick's
Happy
Day.
Happy
St.
St. Patrick's
Patty's
Day.
Day.
We got
Get
our
the
green.
green.